All right, gentlemen, buckle in for a lengthy one because this is going to be really enlightening. It's going to tell us the path to Armageddon in 2025 and beyond, and we have to look forward to the next phase of the economic battle. Now, we predicted 2023 would be chaotic. 2024 would be even worse. And next year's fireworks are set to go off. And whether you're an investor or a survivalist, these four economic events are seismic. Now, most of them are baked into the cake, while others are decided by a coin flip. Some shocks might cause the dollar to collapse, while others pose significant concerns to the U.S. debt market. But all lead to larger trade battles and more antagonism between global giants, beginning with the BRICS. Now, at the start of the year, the bloc would formally admit 6 new members. As we all know, Argentina has pulled out, and Saudi Arabia is still undecided. But even with 4 new members, particularly Iran and the UAE, the enlargement lends tremendous influence to the organization. They account for 35% of worldwide GDP at buying power parity, 45% of the world's population, approximately 30% of global oil output, and more than 20% of global manufacturing exports. This puts a kink into the G7's plans and manipulations. The goal, of course, is to dominate the global south through the existing banking system. You use currency sanctions and SWIFT to guarantee compliance, but if BRICS controls the bulk of GDP, manufacturing, energy, and demand, there is no competition, which is why including partner nations into the bloc was a masterstroke. During the Kazan conference, Russia acquired 13 countries as partners, while China announced 9 new additions, with an emphasis on Indonesia, Malaysia, and Thailand. These are Southeast Asian countries that are rapidly expanding and have large consumer markets. It is true that Trump wants to bring American manufacturing back home, and in order to do so, he must impose tariffs on the rest of the globe. Janet Yellen affirmed this in April, stating that the new U.S. economy will reject Chinese imports in order to defend its industries, or what remains of them. Since 2002, U.S. manufacturing has been declining. The greatest rise has occurred in food and beverage establishments. So, yeah, there are more cafes, but is it truly an accomplishment? Every other industrial sector has declined. Thousands of businesses have perished in industries ranging from metals and paper to manufacturing and electronics. Over the previous 20 years, a fourth of electronic manufacturing has disappeared. Trump wants to change that. But in order to bring back U.S. production to reshore corporations, he will need to deindustrialize America's greatest trading partners, including friends such as Canada, the United Kingdom, Germany, and Japan. It is a zero-sum game. Global demand for products is finite, so $3.2 trillion in imports are now in jeopardy. Every nation to the left will be affected. The U.S. aims to cut its trade imbalance, which is over $1.1 trillion. Applying tariffs of 10% or more would accomplish this. However, such desperate actions almost invariably have unintended consequences. The globe may always counter-tariff the U.S. to lower Trump's own exports. And if trade with the U.S. declines, where can the world turn? They have little alternative but to rely on consumer markets in the BRICS. As a result, the global south will benefit the most from the U.S. trade war. They have expanding markets and a big consumer base in waiting. Now, over the next 5 years, BRICS will account for at least 40% of global economic development. The G7's contribution will be terrible, at only half that amount, which makes sense. While the U.S. economy remains relatively strong, the rest of Europe is being sucked away to enrich the empire. We must also discuss China's expansion, as this is their revenge tactic. Beijing's answer to the U.S. isn't to activate its troops or scramble its navy. This is economic warfare, and China will establish its own customer base. China's budget deficit is set to reach 4% of GDP by 2025. This year's figure was 3%, but Beijing plans to increase it. This means that an extra $180 billion in expenditure will flood the Chinese economy, which they can almost certainly achieve without sparking an inflation panic. Price rises are nearly 0%. Next year, the tale becomes even weirder. Beijing intends to issue a record 3 trillion yuan in special treasury bonds, which is equivalent to $411 billion. That is virtually on par with the 2008 Wall Street bailouts. And the money will be used to pay consumer subsidies, investments, and to assist huge state banks so that they may lend more money, flooding the economy with liquidity. The Ministry of Finance has pledged increased investment in 2025. Domestic demand in general must increase. Trump's tariffs threaten all direct Chinese imports into the United States. The effective tariff rate on Chinese goods is roughly 11%, which is 4 to 5 times more than other nations selling to the U.S. Despite the tariffs, China still shipped $400 billion to the United States. But what if the levy goes up to 25%? What if it reaches 60%? This would lead to a fall in Chinese exports to the United States. Even if the items are channeled all the way through Mexico, profit margins will undoubtedly suffer. This is the danger to Chinese firms in 2025. Tariffs would undoubtedly impact U.S. consumers, but if they are raised high enough, they will also harm Chinese exporters. The EU's tariffs on Chinese EVs are an excellent example of this. While businesses like BYD continue to sell automobiles, overall demand in the EU is beginning to wane. Market share fell from 8.2% in October to 7.4% in November last month. The EU tariff rate is relatively high, approaching 45% for certain products entering the common market. So, in 2025, we should expect a large stimulus to flood the Chinese economy. And what they're doing now isn't enough, and the time for half measures has passed. The major message is simple. China's divergence from the G7 will intensify next year. They can no longer rely solely on exports to drive development. Like the real estate model, China must transition to a consumerist economy. The previous models are all being broken down. So, 2025 is going to be insane. Now let us briefly discuss Russia and Ukraine, as this will be a major flashpoint in 2025. Trump now wants to terminate the conflict, which is evident. He has also intimated several times that the United States wishes to leave the European theater of battle, if only to stop draining American resources and avoid nuclear arms. Now I have to congratulate Trump for this. No one wants mushroom clouds on the horizon. I do not want to play Fallout in real life, folks. I don't have a nuclear bunker to escape to. However, bringing the battle to an abrupt end will be difficult. The devil is in the details, and there must be a mutually agreeable resolution. This implies Russia has a voice in how the conflict ends. Whether we like it or not, this is the reality on the ground. Just a day earlier, Russia rejected Trump's request for a truce in Ukraine. Now, make no mistake, the Kremlin wants discussions, but not entirely on Trump's terms. This is a really critical distinction. The next paragraph from Lavrov is really crucial. It indicates that Russia wants something substantial. After the Istanbul and Moscow Accords, once bitten, twice shy. A ceasefire is a route to nowhere. We require definitive, legally binding agreements that establish all of the conditions necessary to ensure the Russian Federation's security. Putin wants agreements to be implemented not only by Russia, but also by NATO, particularly the United States. A truce is somewhat worthless if a larger fight develops just a few months later. But let's be serious here. In addition to geographical gains, Russia plans to seek the return of frozen assets. And this will most certainly be a significant negotiation chip with a large sum of money at stake. But will the EU play ball? The majority of Russia's money is frozen in Europe. Kaja Kallas, the EU's foreign affairs chief, wants even greater expropriation so that the funds might be used to help Ukraine. And don't forget that the U.S. has also provided Kiev with $20 billion, which is secured by confiscated assets. Will Trump reverse this decision? Can he repay the money? Because this appears to be a vulnerability. And here's why this matters, particularly if you're a gold investor. If the United States or the European Union do not return the money, let us presume that they will send the world the largest Batman signal possible. Global central banks will hear this loud and clear. Western bonds are no longer 100% secure. There's counterparty risk, and your assets might potentially be confiscated. So the G7 has crossed the Rubicon. So it's no longer unfathomable. It is now a plan for the upcoming economic war. So if the assets are not recovered, the consequences would be seismic. It would be awful news for the West, horrible news for Russia, and perhaps good news for gold. Now let's shift gears and discuss the most serious threat to the United States in 2025 and beyond. China is disturbing the treasury markets. First, let us acknowledge that the U.S. bond market is in turmoil. The data doesn't seem good, and investors are pointing it out. 10-year rates have surged to their highest level since May 2024. Yields have increased from 3.6% to 4.6%, which is worrying. This occurred at the same time when the Federal Reserve was lowering short-term interest rates. Fed rates are considerably below 4.3%, and the yield curve has stabilized. In other words, investors want a bigger return for holding U.S. paper. They do not believe that inflation in the United States will ever hit 2%. It might even come back with fury. And since Trump proposes to reshore industries, the level of borrowing in 2025 will be just ridiculous. We haven't even mentioned Trump's other plans for excursions. Every week, they would combat China in the Panama Canal, take over Greenland, and troll Canada. Yes, that was his Christmas message. It is undeniably enjoyable, but it appears to be too expensive for Americans. He's going to run up the deficit here. Now, here are the numbers and why bondholders will suffer actual losses. In 2024, the federal government recorded a $1.8 trillion deficit, which is 8% higher than the previous year. And this is only during Biden's time. Sure, he launched and proposed the Inflation Reduction Act, which I don't believe cut inflation, and he granted Ukraine tens of billions. But Trump's trade battle might cost considerably more, especially because income from tax cuts is expected to decline. And how will you make up for the shortfall? You run up the deficit once more. And here's how bad things could become, based on the CBO's cautious estimates. By 2034, the deficit will have increased by another $1 trillion, reaching $2.8 trillion, or 6.9% of GDP. But consider where the majority of the deficit comes from. It comes from the net interest payments. Interest payments alone account for 4.1% of GDP. This is ridiculous. So if you're China, this provides a vulnerability. There's a movie called Courage Under Fire, and Trump's economy will be reshoring under fire. Beijing has already begun to exert pressure on U.S. borrowing prices by issuing its own dollar bonds, using trade supply as an economic rod to stymie treasuries. Now, China just issued its own dollar bonds in Saudi Arabia a few weeks ago, which were oversubscribed more than 20 times. They released $2 billion in notes and received $40 billion in bids, allowing China to borrow at almost the same rate as the Biden administration. This is ridiculous, and it bodes ill for future borrowing costs in the United States. In certain circumstances, China's dollar bonds provide lower rates than treasury bonds. Beijing is encouraging local investors to put their money in Chinese dollar bonds issued by the government. And this is how insane things are getting. In the future, we may anticipate the Chinese taking more capital away from the United States. Now, this does not indicate that the U.S. Treasury market will collapse tomorrow, but it does move the eventual default date ahead. And the only means the U.S. has left to confront China is to depreciate its currency, weakening the dollar. However, this would result in a worse inflation issue in the short run. Can Trump actually manage that? So, relying on 2025 will be messy, and if this trend continues, we may anticipate greater asset prices, Europe to become considerably poorer, and China to gain much more economic dominance. And all of this is ultimately highly disruptive for the United States. But as always, let me know what you think. Will 2025 improve with Trump in power, or will it worsen from 2024? Please let me know in the comments. Remain safe, and remember to like and subscribe as we traverse these tumultuous times.